Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, September 11th, and today is the day that America reflects on all those uh, unfortunate circumstances. So, kind of remembrance of 9/11. So, anyways, we'll just jump right into it today. As that's come a long story as it is, we got a couple economic news releases. We got the NFIB Small Business Index for August numbers. So this is kind of optimism or negativism from the small businesses gauges. So July we had 91.2, and then they don't do any forecast, so they just came in up at 92.19. So what that means is that small business, kind of like the consumer confidence, but for small businesses, that they're seeing a little bit more business, more activity, so they're feeling a little bit better about where things are going. So good news right there. And then we got the trade deficit. These are for July's numbers. So June we had a negative 41.9 billion. We figured it was going to dip more down to 43.5, and it remained at 42. So just a tad more, about 100 million, if you can look at the numbers like that. So let's jump over to headline news. So right now the stock market's up. It's not due to the technicals we had there. It's due more to the headline news, what we have going on here. It's not due to Moody's, but we do have a situation where Moody's has been before Congress today talking to them, discussing that if we don't do something in relation to our debt and compared to our GDP and make sure that we're not, going overboard with the debt and be able to repay that debt, that we're going to lose our premier status with them by the next year. So they're just basically kind of forewarning Congress that they need to kind of develop some type of plan to reduce this deficit that we currently have here. But here's where the big thing is. It's the German higher court ruling today. Basically, what they overturned an appeal, basically saying that last week there was an announcement regards to Draghi and the European Central Bank. The European Central Bank basically stated that they're going to go ahead and with a bond buying purchase program over there called the ESM. German court said that they overturned it. They're going to make a ruling tomorrow, so there's some cautious optimism on this. So right now, Wall Street's kind of liking this, feeling kind of positive that maybe by tomorrow there might be some good news. And that's also on the heels of the Fed having their open meetings, FOMC starting tomorrow, and having their announcement on Friday. So they have a 2-day meeting. So that's kind of again on the heels. So that's the big news will be for this week as investors are waiting to see what happens over in Europe. And then on top of that, we got the Fed with their meeting, listening for any continued bond buying purchases, QE3, if you will. That's going to be coming up. So if there's not any mention of that, then you may see a tank in the market, maybe improvement in the bonds in that regards. But we'll have to kind of wait and see. So let's go over and see how the interest rates are being affected today by this. So right now the bond market's down, which creates higher pricing for interest rates. And primarily that's due to the money coming out of the bond market going into the stock market. So sometimes we compete for dollars here in this situation. This is one of those situations where money's coming out of the bond market, which increases the interest rates a little bit, and meanwhile goes into the stock market. So a little bit higher interest rates today. And thank you for we'll call that a day. Thank you for stopping by, and we will see you guys tomorrow. Seems like tomorrow will be a big day for at least what the German ruling comes out. All right, folks, have a great day. Thanks again for stopping by. Stop by mikesdailymarketreport.com if you'd like to get these emails sent to you on a daily basis. Have a wonderful day.